Welcome back to Small Caps, ladies and gentlemen. You all know my name's Kerry Stevenson, and I'm delighted to bring back Gareth Soloway. He is the founder and CFO of InTheMoneyStocks.com. Check him out. Now, at the end of this conversation, I will ask Gareth a little bit more about InTheMoneyStocks.com, what he's doing, but we're going to do charts, we're going to do the markets, what's happening, what's going up, what's going down, volatility, lots to talk about. Gareth, great to see you. Thank you so much.
Thank you for having me back, Kerry. It's great to be here.
Well, last time we got a lot of commentary and a lot of people saying it was really interesting to hear what you had to say. Now, when we spoke last time, your comment was gold will start to outperform. Oh, like clockwork, you must have the magic juice. It looks like gold is starting to have a bit of an uptick. It hit 1870. Is this a false start, or do you think it's just the beginning?
For me, this is the beginning of it, right? So the timing, if you match it up to the 1970s and 80s, it aligns perfectly. The pattern is breaking out. In fact, we can take a look at the charts, and I'd love to go over that again. So here we have the chart of gold, right? And you can see we had this wedge pattern, and this wedge pattern, we've just broken above it. And the key for me is that it stays above. I've seen days where we've cracked it and then we pull back down, but notice how it's now staying above it. You even got to pull back yesterday, and then gold pushed back up today. So that's very, very short-term bullish. I think this is the beginning of a move that should take us basically back to the 2020 highs. And again, just to remind people, this pattern is a common pattern that occurs in many, many different charts, not just commodities, but stocks, cryptocurrency. And the pattern is this, is that you have a big move up, where in this case, from 2018 to 2020, you went from about 1,100 and change to over 2,000. You then have this consolidation pattern, which is basically the market digesting the big move. So think about, you just ate a huge meal. You can't just run a marathon afterwards. You got to sit down, digest, and then you can run that marathon. And that's what I think gold is starting to do here, starting to begin to make that marathon run to the upside. The other thing I'd like to point out too is that this pattern is replicating that mid 70s to early 80s pattern that gold took. So a lot of people have commented to me, well, inflation is so high, why isn't gold just ripping up? And the answer is, just look back in history to the last time you saw the type of inflation we're seeing right now, 8%, 10% inflation. So just before I go to that period in time, just remember it, 2 years up, and then basically now 2 years of consolidation. So let's remember that. And let's go to the weekly chart so I can get back there quicker. And we're going to go back to the 1970s on the chart here. So let's do that right now. Let's go all the way back. Bear with me.
I love this.
Here we are. All right. So history, and the best way to figure out the future is to look at history, right?
Absolutely.
So if you look here in the mid 70s, this is mid 72, 1972, you began an upward move to about mid 74, right? So this was that same move that I would refer to as the 2018 move. So 2018 to the 2 years later, 2020. And then look at this. From this point on, for the next 2 years, you did the same thing that we've seen gold do over the last 2 years, from 2020 to 2022. And then look at what happens to gold here. It starts to play catch up. Everyone rushes into it because they start to realize it's an underinvested asset. And gold goes from basically $100 to $900 an ounce. Now, again, just let's be clear. By no means am I saying gold's going to go up 800%, in the next 2 to 5 years. But is it possible that this is a breakout that could take gold to 4,000 or to 5,000 an ounce? Absolutely. And it makes total sense if you think about the amount of money that's being printed, the fact that the Fed is trying to pull back now, the Federal Reserve is trying to kind of take that back. But we all know what's going to happen. It's going to be a repeat, just like it was after 2008 and 2009, where they pull it back, the economy goes into recession, they have to come back and start printing more money. So again, to me, this is a great opportunity where you're actually seeing the charts replicate 1970s price action on gold, and we should go quite a bit higher.
Just trying to digest all of that, Gareth, because as a gold nerd, it's music to my ears. However, what are the differences between the 1970s and now? Now, back in the 70s, certainly the Fed, was there printing of money like there is today? And does that change potentially the way gold potentially might react? In other words, people still ignoring gold because that stock market is on higher highs.
Right. So from what I know, the Federal Reserve certainly wasn't printing as much money as they are today, right? I mean, this is unprecedented what we've seen them do. But what's interesting is in 1977, that's when they got their dual mandate, where they had to start paying attention to unemployment for the first time, which unemployment is the main catalyst to why they print money. When unemployment goes up, they need to stimulate the economy so it will come back down, and they do that by printing of money. So it's interesting that big move in gold kind of came right around that dual mandate, which was the creation of that money printing machine, if you will. But again, certainly that doesn't necessarily mesh. But in all fairness, that should even be a bigger catalyst for gold, right? I mean, the inflation is obvious. We know that matches pretty well. And then if you look again at the money printing, the excess money printing, it does make sense that you have this bigger move potentially coming in gold.
I just want to ask the question, is there I guess, a disconnect between what I call the funny money, the fiat currency, the paper stuff that is printed and printed and printed, and gold? Has it been disconnected?
Well, there's always a disconnect between assets, right? So you'll see in gold, for instance, where investors get disenfranchised with it. It's not performing as good as the stock market. It's not performing as good as Bitcoin. So no one wants to invest in it. But what ends up happening is that then they play catch up later on, and then money will flood into it so fast that you'll see a massive spike higher in a very short amount of time. So again, the biggest controlling factor of investing is emotion. People either are greedy or they're fearful. And right now there's no greed or there's no fear in gold. It's just like, gold's there. Obviously people are interested because of the inflation, but you don't see that greed. The greed is what is that cataclysmic pop to it. What we saw in Bitcoin when Bitcoin went from, it was 30, pulled back in mid-year of 2021 to 30,000, and then it just ripped to 69,000. That last bit, that last 10, 15,000, that was all greed. There was nothing behind it, just people chasing FOMO, if you will. And that's, again, that will eventually happen with gold. And by the way, just in gold, one of the things that I think is very important for investors to understand is that if you go back to when Bitcoin was outperforming in November, right? So here's, if you mapped over Bitcoin would kind of look like this, right? I mean, basically like this. It topped out in November and then it's come back in. There was a lot of people saying, oh, gold's dead. No one needs to invest. Money was coming out of gold. And arguably you could see it with money coming out of gold going into Bitcoin. People were like, all right, Bitcoin's the new thing. But the question I would pose is, well, then why didn't gold sell off more? And if you think about it, what's the logical explanation? Big money, smart money was sitting there with their hands open, just accumulating. They know what's coming. Big money always is ahead of the game. They're buying with both hands and they're just waiting for this next move to come.
You mentioned Bitcoin. You mentioned a lot of liquidity, a lot of movement into Bitcoin. Now, some of our audience will understand Bitcoin, some won't. Has it got a place to play in portfolios, number one? And I'd love to see a chart of your views on where you think Bitcoin's going, because as you said, it ripped up to 69,000. And then it's what I would call the strong hands are still in, but the weak ones have been shaken out.
Yes. So charts are charts. And I think for me as a technician is, that's the beauty of it. It can be a Bitcoin chart. It can be a gold chart. It can be a stock chart. I can read it if it has enough liquidity to it, like Bitcoin does or like gold does. And so what's amazing about this is that if you look at the highs from April on Bitcoin and this high here, that this line created between those two highs is perfectly parallel to the lows here and here, and even this one over here. So what that did was it gave you a little short-term bounce in Bitcoin, and Bitcoin has had a nice move off of that. For me, I don't think this is the end of the move down for Bitcoin. I still see a flush out. Bitcoin will eventually, in my views, be a kind of digital gold, but it hasn't matured into that yet. It is still too volatile. So you still don't have a lot of elderly investors in there. Pension funds aren't in there. Mutual funds aren't in. I mean, there's all the players that kind of create stability in a market are not in Bitcoin yet, and they won't enter until you get more regulation around the space. So inevitably, I think Bitcoin does become some sort of digital gold, and I still think there's a place for both to coexist. But in the short term, it's treated more like a tech stock, where when you have a tightening rate environment, tech stocks tend to sell off. Bitcoin will also sell off. So I actually still have it priced in, even though I went long down in this range and I've sold half of my position here. I still expect Bitcoin to ultimately go down to about 20 or sub 20,000 before the flush is fully out.
And if it goes down to that level and it flushes out the weak hands, do you think it will then have a better, decent run? In other words, is it a long-term hold?
Yes, I really, truly believe it is. So again, for a long-term investment, I'm not a buyer yet. I still think there's too much fluff in the market. The biggest signal for me is when you start seeing most of the coins, the cryptocurrencies out there. And by the way, there's over 10,000 today at this point, way more than 10,000 coins. A lot of them, I'd say 95% of them need to go out of business, right? I mean, there's just a lot of them have no use out there, or they're just replicating other usages. It's very much like the dot-coms back in the late 90s, where you had so many of the dot-coms go out of business, but then an Amazon survived and thrived and is now way, way higher than it was back then. So I think that has to happen for cryptocurrency. But once you flush it out, I think there is a place for it. And I think it's a great place to be, to kind of offset the dollar exposure, just like gold is. And then for me, it'll be hand in hand with gold in my portfolio in that respect.
My question to you is, why? I know Bitcoin was the first one in there. Why is Bitcoin different from the other coins? In other words, what's its value proposition versus all the other 9,999?
Right. And that is such a good question, right? So basically Bitcoin was number one. And as being such, it has kind of claimed the spot with bigger institutions that have started to invest, and bigger investors like Jack Dorsey of formerly Twitter, now Block. We've seen a lot of other companies kind of adopt it. Tesla, Elon Musk has started to play in Bitcoin. They have some on their balance sheet. So that's really what differentiates it. Things like Ethereum, which a lot of people have heard of, it's the second biggest cryptocurrency. That's more of a network where things are built on top of it. So I look at Ethereum and some of these other ones like Solana or Avalanche or Cardano, and I say, okay, well, those are interesting to me, but what if a better technology comes by? Could it be kind of made obsolete? And that's the big concern. And maybe it won't be. Maybe they'll continue to upgrade the system and everything. But for Bitcoin, what makes it unique is that it's the only one out there where people and big money are starting to say, okay, this is a digital gold. This is a store of safety. And that's what you need. You need it to be the unparalleled kind of store of safety. And as long as people recognize it as such, it's going to be that. And I think that's important. Now, again, if there was another coin that was right behind it that was like, oh, this is a store of safety and that's it, then there might be an issue. But there really isn't. There really isn't any other coin like that.
All right. So watch this space. Gareth just said there's still a lot of potential weakness going forward. He's not buying at the moment, but long term, he sees value with Bitcoin. Not necessarily the 9,999 other ones out there. So be careful, ladies and gentlemen, be careful. While I've got you, Gareth, the oil price, do you see that topping out a little bit at the moment? Where are we going with oil? Because the oil and gas, we still need oil and gas. Yeah,
we do. So oil and gas, I actually have topping out here. In fact, I'm short oil currently. Natural gas, I'm not, because I'm still unsure about the Ukrainian situation and how Russia could impact, especially in Europe, the price of natural gas. But for oil, at least, I am short oil. And let me show you the chart on this. It's just so amazing to look at. So you can see oil currently, this is WTI, but WTI currently trading around 91.05, pulled back today about $2. Beautiful little pullback. But look at some of these trend lines here. Fascinating trend lines, right? So what if we connect this high to this high to this high and extend it out? Look at what we get, right? So all of a sudden you have a trend line here where you've seen every time you hit that line, you see a pullback on oil. And the idea is if you connect these lows, this pullback could take you all the way down there, because that's what history is showing you, right? So every time it hits this upper line, you get this pullback, and each time it's a bigger pullback. So that would be my first thing. Now, I want to show you a couple other things here because it becomes very intriguing. When you look at the larger time frame, we're going to flip over to the weekly chart. There are so many levels that intersect this high, and the more levels you have that intersect at a specific point on a technical basis, the odds become greater of resistance. All right. So for instance, let's do this one here, and bear with me while I just get my trend lines working here.
Before you get that trend line, back in 2020, what was that? Was that pandemic, like that big, massive pullback there?
Yes. Yeah. So that was where crude oil actually went negative. I don't know, if a lot of people recall it, but that was one of the craziest scenarios I have ever seen. I still remember buying oil at like a couple dollars a barrel, and I actually was down on the trade, believe it or not, at the time. I mean, it was just absolutely insane, but that was a one in a lifetime type event, in my opinion, with oil.
What was driving that?
It seemed to be a deleveraging situation. So we knew that the pandemic hit, which everyone then started to freak out over the fact that demand was going to slide so dramatically. And at that point, we didn't know how bad the pandemic was going to be. We didn't know if, millions, tens of millions, hundreds of millions of people were going to die, right? So it was really this deleveraging event where we didn't know the final outcome. Fear took over. And then that just drove the price down. And then what ended up happening is many hedge funds that were long oil and leveraged, they just had to start dumping and covering as they were going out of business. And it drove the price down way more than it should have been. It was nuts.
Once in a lifetime, you reckon?
Yeah, that type, to see a negative print on WTI, I think it got down to like, the contract, the future, it was like negative $50 at one time. It was just nuts. But going to the charts here, take a look at this. So we have this one trend line, which marks the top on oil. Look at if we connect these lines here, right? So now you have this connector to here, and it also intersects there. In addition, there are some other ones here as well. For instance, right here, which also kind of climbs up. So the idea here for me, at least as a technical trader, is that the more lines that kind of come right into one specific point, the more resistance it will be. And again, when you see the pullbacks each time being what they are, to me, I'm more than willing to be a portion of my portfolio allocated correctly, but be short oil in this situation.
Longer term, oil?
Wow. It's that I'm not sure about. And I'll just be honest that I'm not sure about it. I think there's going to be a give and take between alternate energy, right? Solar and wind and all these other fuels that eventually will take down demand of oil. But I don't think we're at that turning point for probably quite a few years. So it's really tough to know. I also worry that the Federal Reserve, as they tighten rates, right? Remember, if you look at the last 20 years, the only times they've tightened rates really were in a situation where the economy was very strong, and they tightened rates to slow the economy down. Well, now there's high inflation, so they have to tighten rates. And the idea is it will slow the economy down as well. If that happens, then the demand for oil could slip as well, which goes to why you could also see an oil pullback coming over the next couple months.
Gareth, what's your view? Do you think that they are going to do a little bit of a rate increase in 22?
Yeah, I think at least 2 times. I know the market's pricing in about 4 or 5 times at this point, but I think at least 2. And then the big question is, how quickly does the stock market decline, which then, reduces the wealth effect, which then translates into people buying less, which translates into companies having to lay off people. It's going to be a weird scenario this year, but the beautiful thing about it for someone like me, who's more of a trader or a swing trader, which is a shorter term, is that you get these crazy drops and then these crazy snapbacks, and it's just whipping back and forth. And if you can buy support and sell resistance, it can be a very profitable period for those of us that do that.
I was about to say right now for you, if you play it right, this can be quite a lucrative time, I guess.
Very lucrative. In fact, these type of markets, for longer term investors, not so fun. But the way I look at it is like the longer term investor had lots of years of just up grinding markets. Now it's the time for us who are swing traders to kind of make a good score.
I love that. I want to talk uranium. You mentioned, we've talked about oil. We talked about alternatives. I think it's still a little bit early, but there are people saying that uranium is coming. It's going to have its day. People are not as frightened as before, and there's a better understanding. Can we have a chart on uranium? I'd be really keen to see
Yeah.
what that's looking like.
Yeah, so uranium. If we first of all, if we zoom out, pretty a wild chart, right? I mean, here's
Yeah.
the uranium ETF, and you can see this looks to be a change in trend overall. So to me, that's a good sign. The question is, where do you buy it, right? So for me, I number one, I look at the chart levels, and you can see how if you draw this line out, you basically hit it here and here. So if we do dip again, this line is now weakened. So the way technical support works is that the more you hit on it, the more weakness that line becomes. Think about it like a door. If I ram into a door once that's locked, I'm probably not going to knock it through. If I ram 2 or 3 or 4 times, eventually that door breaks. So the idea is if we start coming in again, it probably does break there. But then honestly, I think you're just going right here. I think this is a huge buy right in this $16 level, and I'll be a definitive buyer there, no doubt about it. So I do think uranium, again, if you look at that longer term chart, lots to support at 16 on this ETF. And if you look at that longer term chart, it has a lot of upside to go, especially if inflation stays high.
So from a chartist point of view, what you're saying is could pull back a little bit, but the ultimate longer term is you see strength in the uranium price, which could be good for stocks as well.
Yeah. So for instance, at the current price, because it's already hit that level, I'm not a buyer. But if it pulled back to 16 on this ETF, the URA, then I would be a buyer there, absolutely, because I do think it's going to go up. It looks like the longer term chart again is starting to make this beautiful kind of cup pattern, which again dictates that you could be going back to $50 very easily on this URA, which again is only at 21 and change right now.
Wow. Well, speaking of uranium, because that's a sort of a different type of stock, I want to go into some of the resources when it comes to, I guess, the EV revolution. So we're talking the coppers, the nickels, the cobalts, and of course the L word, and it's not love, ladies and gentlemen, it's lithium. Lots of people loving lithium. Love to get your take on the, I guess, more resources areas, commodities in general, what your thoughts are.
Yeah, sure. So I think, again, with the electric car market heating up and more countries going that way, you have to think that lithium is going to see more, higher highs. Here's a chart here, weekly chart of LAC. Lithium Americas Corp. And you can see it's had some amazing moves. It keeps pulling back a little bit, but for the most part, it's really had a remarkable run to the upside. So again, I'm not one to chase after this recent bounce here, but on a pullback to a technical level, I absolutely would be a buyer. For me, again, it looks like there's a lot of support right down here. This would be my spot right around 16. Now that's quite a bit lower, but keep in mind how volatile this ETF is. I mean, or this stock is just so volatile. So again, just keep in mind that the things that will affect these stocks are going to be things like if the economy starts to slow. So if the economy starts to slow, this could easily get back to 16, but you have to think about what's the bigger macro trend. And the bigger macro trend is even in a slowing economy, when the economy picks up again, electric cars are the future. And that's the way it's going to go with lithium. So lithium, again, buy on the right pullbacks. Again, same thing. The future is here and it's electric cars.
You said slowing economy. From what I understood, the US economy was very strong at the moment. Are you seeing a pullback because of those potential couple of interest rate rises, or what's your view on it?
Yeah, so a couple reasons. So you're right. Right now, the economy is strong. I'm always a forward-thinking economist, meaning that I'm always looking to what's going to happen in 6 months from now. And my expectation is that as the Fed tightens and inflation continues to be an issue, the Fed will be forced to tighten more. That inevitably will bring that stock market down. So you could argue that the strength in the economy is being driven by a wealth effect, right? Everyone's 401ks, retirements, investing accounts. Crypto was amazing until the last 6 months or so. So everyone was so wealthy, they were just like, making it rain with that money, right? So the idea is that as that unwinds, it's likely going to translate into a slower economy. If you think about it, right, you have your retirement funds. If in 2 months you were down 30 or 40% in that, I mean, you certainly wouldn't be saying, all right, let's go on a lavish vacation now or something like that. So I do expect the Fed to have an impact on the economy, and that'll start to slow things. And then again, that's my kind of thesis for why oil could decline. You have a slowing demand issue there. And then also same thing with like a lithium and even uranium to some extent, but definitely just to a pullback level where you start looking to buy those things.
brings us nicely round in a circle, I guess, Gareth, to what we started with, which is gold. People are getting nervous right now. I would love, I guess, an overall picture to our audience out there of the best way that they can potentially protect themselves in what's looking like quite a volatile market. Do they just set and forget in the share market, or should they be cautious because of what you just said was, if the government turns around, raises rates a couple of times, that could see a bit of weakness in the share market, and that wealth effect could make people a bit nervous as they see things pull back. What is your advice to our audience?
Yeah, so the first thing is to be diversified, right? So you don't want to be all in tech stocks or all in, any sort of concentration puts you at abnormal risk in a bear market. What I would definitely do is have a good chunk in gold. Gold miners would be a good place to do it. Even silver, right? I mean, yes, silver could come down a little because of a slowing economy, but I don't see a lot of downside in silver. Max $19, 19.5 per ounce on silver. And then I think you also want to, for me at least, I'm diversifying into foreign stocks. So I do have some US stocks, but I'm very careful there, smaller investments. But then I'm looking towards other countries that you may see the governments be more lenient in terms of tightening, like China stocks or South America, places that, we've seen, especially since COVID, all the money has come into the United States and investing in the US markets. As the Fed kind of makes it not so fun for that money, it's going to start to look to be invested in other places. And I think that countries like China, yes, there's risks of regulation, but it makes sense to me that based on the valuations there, you have to allocate a little bit of money into those areas for sure. So again, there's always a bull market somewhere. It's up to us to kind of figure that out. But again, be conservative. Nothing wrong with having some cash on the sideline so you can be able to jump on good opportunities. And then gold, silver, some of the core metals, definitely play it safe.
All right. Well, we're running out of time, Gareth. I love chatting to you because it's just that the charts are amazing. But I said at the beginning, you're the founder and CFO of InTheMoneyStocks.com. Talk to our audience about what that is and how they might be able to benefit from what you're doing.
Wonderful. Yeah. And I thank you for letting me have the opportunity. Basically, InTheMoneyStocks.com, I have a service on there called Verified Investing Alerts. And what I do is when I take a trade, I post it up there. I give the exact entry price, all the information that's pertinent for someone being able to follow me. And they exactly can do that. In addition, I do a daily video. So I really pride myself on these videos. They're about 20 minutes every single day, and it's included in the service. And I go over all the technicals on charts on gold and silver and oil and the stock market and lots of different opportunities, teaching while also guiding. So it's kind of a dual-sided service where people get trades, but they also educate themselves on the different stock setups and trading and stock charts.
So if they want to do that, they just go to InTheMoneyStocks.com. And where do they go then? Is there a spot where they can subscribe?
Yeah, you'll see on the homepage there my name, and just there's a drop down under my name and the services right there. So super easy to find. You can see the track record so far for this year is there. It's all posted up, transparency and everything. So you can see how we've done so far. And then you just sign up and you get access to all the current trades and any new trades that I post, plus the videos.
Well, he's been right so far. When we spoke last time, he said gold is going to start to outperform. So far, so good. Let's see what happens next time, because I will be chatting to you again in about a month's time, Gareth. It is always wonderful to see you. Have fun in Florida. I believe it's pretty good there at the moment. Weather's good.
Yes, beautiful here. Absolutely beautiful.
All right. Well, thanks for joining me on Small Caps today, and we'll see you next month.
Thank you so much. Take care.